Revaluation surplus and depreciation charge. At 31 December 20X5, ABC, a limited liability company, owned a building that had cost $200,000 on 1 January 20X6. It was being depreciated at 5% per year. On 31 December 20X5, a revaluation to $250,000 was recognized. At this date, the building had a remaining useful life of 10 years. What is the balance on the revaluation surplus at 31 December 20X5 and the depreciation charge in the statement of profit or loss for the year ended 31 December 20X6? Answer: revaluation surplus equals fair value minus carrying amount. Revaluation surplus equals $250,000 minus $200,000 minus $200,000 times 5% times 10 equals $150,000. Depreciation charge equals $250,000 divided by 10 equals $25,000.